Well, ask yourself, does it even matter what day it is when the market is open 24/7 on Bitcoin and other cryptos? Could you have seen this move coming? Yeah, if you were trading the VEPS, you sure could. You saw the trending move starting to form about 4 hours ago. Why didn't you take it? Right? In fact, the move happened a little bit more than 4 hours ago. It was already in a trending move around 4 hours ago or so. And you could have easily gotten into it. You would have seen on multiple time frames. And you could have gone to the upside. Back from around 68.2 to up to around 70K plus. Last I looked at the chart. If you're asking, why aren't you at your desk right now trading while it's running up or down or whatever? Because I'm busy doing other things now, right? That's the whole point of trading. Yes, when you're at your desk trading, trade. When you're out doing other stuff, you do that other stuff. Now, should you have taken profit somewhere along the way? Yeah, in fact, there were even a couple places to take profit along the run up. Right? It wasn't just a straight run up. Like on the 15-minute, profit, reload when it dumped down a little bit, and flip the switch back on for the next move up. That's giving more capital for the next trade. So, but then your P&L on the trade isn't as high, right? But if you add up the amount of P&L made, the amount of returns made over that same period of time with 2 or more trades, you actually got more returns doing that. Even more than that, right? Trade crazy low time frames, 1 minute, whatever. Try to be like a bot. Certainly doable, but hard to achieve, and unless you actually have the speed and the connection and all that to run trades in under a second, it can be damn near impossible. Right? So that's why I like the 1 minute, to each his own. And 1 minute TF works great. 15-minute would have shown you the trend was continuing, and it was indeed continuing when I left, but it was also at a good take profit area, having hit and just passed the second daily resistance line, if you want to call it that, which is really just the sell pressure line. And it was starting to waver there, which was a good take profit area. So now the question is, whatever it does, will it go up, down, or sideways? I don't care. Well, but what if it runs up to 80,000 while you're not at your desk? So what? And the BTC I hold increases in value, right? And whatever cash I have is still capital. And yes, you can say, well, it would be worth more if you would have held it all in BTC during that trade. Yeah, sure, if you put all their eggs in one basket. But then, if I walk away from my desk and it plummets, then it's all worth less when I come back, right? So that is why, holding more than one asset, like fiat and crypto, and multiple fiats of that, and whatever else one might hold, is a good idea, right? Now you can say, well, how can you say you believe in this if you're not all in? Who said you have to? Who said you have to believe in something? And who said you have to be all in even if you do? Right? Warren Buffett, probably the greatest investor of the last 100 years, who certainly doesn't know enough about crypto that I would take his opinion about crypto, but he certainly knows about other assets, has always, said very intelligently, But diversification is a very important, tool. And I'm not appealing to his authority. I'm just saying, if even a guy like that, who happens to be a really successful investor, if he's made tons of money and as an investor and diversifies his portfolio, right? He doesn't hold only Coca-Cola or only Intel or only Apple. Holds a whole bunch of stuff. Why? Because some years some things go up, some years some things go down. Some days some things go up, some days some things go down. Right? That's the whole point. And whatever your targets are, you have to trade accordingly or invest accordingly, so that you're not going to be hurt by fluctuations in the market, which is the normal course for markets. They fluctuate. That's kind of the whole point. As an investor, you generally want things to go up if you're holding those assets, and you generally want them to go down if you're selling them. So, pick your side on any given asset, on any given trade you're making or investment you're making, and run with that. But it doesn't mean you have to be all in and literally put all your eggs in that basket. That would be foolish and insane. Right? Now you can be a Bitcoin maxi or a fiat maxi or whatever maxi if you want. That's up to you. But it is certainly not considered the wisest course of action for a number of very simple statistical reasons. Right? Not the least of which is that statistically you are more likely to lose if you put all of your eggs in one basket than if you diversify. Right? Well, what about that guy who made $1 billion on Doge or whatever? Or whatever, $1 million, he put all his money into Doge and woke up the next morning a millionaire. Yeah, good for him. He gambled. There's lucky gamblers in every bunch. They're far and few in between. Right? I personally don't think that is a wise thing to do. And if you certainly not, if you're not some young kid who can afford to lose everything because you have time to rebuild it all. If you're not young and dumb and full of risk appetite that is not rational, well then it's generally not the wisest course of action to do that. Just stick all your eggs in one basket, as they say. Right? Generally speaking, it's considered wiser to diversify a little bit. Or a lot, but in any case, to diversify. Not to hold only one thing. Right? For the same reason that, think about it this way. Before you ever ran your first investment or trade, and all of your money was in fiat, which is the case for most people, right? Few of us are born with a portfolio, a diversified portfolio in our name. Some are, an increasing number even maybe, but in general, most people, by and large, the vast overwhelming majority of the population, well over 90% of the population, is not born with a diversified portfolio, right? So by the time you start investing in your life, however young or old you might be when that first happens, right? You probably own whatever fiat you happen to have. Okay, maybe you've traveled a few, you've gone to some vacations, and you've acquired a few bucks here and there in some other currencies. Maybe you have some euros, or some yen, or some dollars. Whatever you have that's not native to your currency, it's probably far less than what you have in your native fiat currency, if you happen to live there, or in the fiat currency where you live before you first trade. And then why do you trade? You trade because you want to make money, right? You invest because you want to make money, right? Right, so what are you doing when you're investing? You're buying different assets. meaning you're diversifying. So the very definition, any kind of investing or trading is a diversification. Unless the only thing you're doing is literally just only longing your own fiat currency or only shorting it, right? And even if you're shorting it, you're shorting it against another currency. So technically, you're using that other currency, which is a diversification from what you currently hold, right? You're diversifying from your currency, using another pair during the duration of that trade or investment. So, and most people who trade, don't only trade one asset class. And yeah, sure, there was a time when Forex was popular, relatively, and still is for retail traders, for whatever reasons. But for the most part, people are trading more and more, different assets. Stocks, obviously, super popular. Bonds, commodities, and increasingly cryptocurrency, right? So any of those assets, by definition, when you use them to trade, they are a diversification of your portfolio. And the only way to not be essentially hung or hoisted by your own petard, right, is if you put assets in a few different baskets. Because like I said, markets go up and down. So what if you are in a place where the asset that you hold, the one asset you hold, your fiat currency or whatever, is very volatile? That happens to be the case in many countries, right? You wake up one morning, the price of bread is doubled, or the price of housing has gone up 50% or whatever. This happens all the time in different countries. People in the US are less familiar with that because everything seems to be relatively stable, if on a slow decline, in terms of the dollar's purchasing power and things getting harder and all that stuff. I have news for you, my fellow Americans, on this Memorial Day. While the U.S. economy seems to be okay, and is in many regards okay, numerically, and according to the metrics we use to measure them, at the same time, it's not okay. Right? Wages have not gone up in parallel with the cost of living for more than 50 years. There's been a massive divergence between wages and productivity and the cost of living, right? So companies have been getting richer. Year by year, we keep seeing record profits in companies. They're not increasing their workers' wages commensurate with the cost of living. And so workers are essentially wage slaves for the most part, right? Unless you happen to be in the top 1% that owns, or the top 10% that has a high enough salary to keep you out of the wage slave circuit. The fact is, the other 90%, that's 9 out of 10 people, they're wage slaves. We gotta break our necks, break our butts to make every dollar. And if our luck runs out, we run out of a job, and we don't have any savings, we're screwed, right? If we don't have investment money and all that stuff saved to the side, we're screwed. What do we do, right? So that's why, you don't want to be in the situation where literally all of your assets are in one basket. And as a trader and an investor, you want to make sure that you diversify a little bit so that you don't wake up in the morning and find that your fiat is worth 30% less or 50% less, or, by the way, is no longer valid. I have relatives who, one in particular I can think of, who had a job for multiple NGOs, who used to visit various countries for work, And on more than one occasion, he woke up, having gone to sleep in a country where the currency was X, and woke up and the currency was Y. Like they switched currencies overnight because of coup d'etats or whatever. Right? And this happened a lot before, and it can certainly still happen again. So keep that in mind. Don't get yourself caught in a pinch. Learn to diversify a little bit and learn how to trade the VEPs. You'll be glad you did. If you don't know how to do that, go to our site, Alpha Trading HQ. It's the URL is alphatradinghq.com. Click on the Discord link, and you can get your free access to our volatility starter kit. Gets you on your way trading volatility, probability and statistics, and all for free. That's it. Happy trading.